P2P lending and borrowing is a relatively new concept in India. Lending money in an online platform and earning better returns than traditional deposits is indeed very appealing, considering especially we are speaking about higher double-digit returns. Even for borrowers who are who have a mediocre credit history, they can also borrow from them without too much hassle. That is again very appealing. However, the moment we speak about peer-to-peer lending, there are so many questions. So that is why we thought of a webinar today. And we have with us today Mr. Vinay Mathews, CEO of at Faircent, India's largest peer-to-peer lending platform. Vinay is an industry veteran with over 20 years of experience. Having pioneered the concept of online peer-to-peer lending in India with Faircent, Vinay has been instrumental in the company's growth since its inception. About Faircent, Faircent is India's largest peer-to-peer lending website, which caters to retail and business loans. It is India's first P2P lending platform to be certified by an NBFC, P2P by the RBI. Faircent has emerged as India's largest P2P lending website with more than 5.5 lakhs registered borrowers and 85,000 registered lenders, and a disbursement of over more than 55 crores worth of loans till date. We'll start the webinar. Over to you, Vinay.
Good afternoon, everybody. Thank you for joining in. There is a lot of excitement about this new asset class within the investors, and also we've seen a lot of people coming and asking about this in various forums, through online, modes. So there are a lot of interest which we see, within this asset class. So, thank you, ET, for providing this platform. I thought I'll, put out a small presentation. This presentation scope is to make you understand what we do as an organization or a platform to mitigate the risk. So I think the larger question each of us would have here is, what is the risk, in this asset class, and how is it that we can mitigate the risk? So I think the presentation is broadly, covering, that space. So I'll quickly, for everybody's benefit, I'll quickly run through some of the initial slides, and then I'll quickly get on to the risk slides. So what is P2P lending? So that's the first question. This is for people who are new to this concept. This is basically nothing but individuals giving money to individuals. It's a new way of lending. So people, people who have extra money or spare money with them lend out to people who are in need of credit. So that's what the concept is. It comes from a simple, sharing economy model, which I think 15 years back got seeded in the internet space. Google and Facebook started the sharing economy, where people, transact a lot of information, a lot of things about themselves, and share that to people that, they are known to or aware, which, in their normal parlance called friends and, family. So they put out information about where they've been, what have they doing, all of that. Similarly, this economy grow over a period of time, and businesses start to, emerge out of this economy. Some of the businesses are like Uber, for example, is one of the, sharing economy business. So if you have a car, you plug yourself to Uber, and you can take people around and make money out of it. If you have a house, you can rent a small part of your house and make money out of it. That is, Airbnb. Similarly, there are other models where you can, share your jewelry, make money out of it, share your office space, make money out of it, share your course materials and make money out of it. So sharing economy has become very big. And the beauty about this entire sharing economy model is that it removes the middleman from the entire process. So it is direct people, whatever, and typically in the consumer business, this has come about. People who want to share things and make extra money out of it. Similarly, in the P2P space, if you have extra money, you share that money and make money out of it. So that's the model. Globally, this is the fastest growing BFSI space, peer-to-peer lending. There's close to $350 billion of loans which have been transacted in this industry, P2P industry, and it's growing at a phenomenal rate of 50 to 80% annually. And the growth drivers are very clear here. There are digital screens. There are various options now available of digital screens for people. There is the blockchain, which has made things very transparent for people. There is internet penetration, which we have seen in India, which has grown tremendously in the last 5 to 10 years. We are the second largest internet populated country in the world, leaving US behind. China is ahead of us. And plus, we have a young population who are in need of credit, who want to make money. And lastly, in India, this peer-to-peer lending is an RBI regulated feature. So we were the first ones to get registered by RBI. So there are 5 to 6 companies which have been registered by RBI in this space. So that's what peer-to-peer lending is in a brief. But why is it that it is important? We need to understand why peer-to-peer lending is important. It's important because we are able to provide credit to unserved or underserved borrowers, typically borrowers who do not get access to credit from banks or NBFCs. Now, there could be various reasons for which banks and NBFCs are not giving credit. One could be certain PIN codes banks are not very comfortable lending to. There are certain community, or there are certain professions. There are certain areas, restricted areas banks are not very comfortable giving loan to. Now, also banks are not very comfortable giving loan. The ticket size is very small. Let's say 5,000 rupees or 500 rupees. They find it very difficult to kind of give loans. So that's where peer-to-peer lending companies step in. They're able to kind of give credit, and because all of it moves through technology. So you can lend somebody as low as small as 500 rupees, going up to as high as 10 lakh rupees. The other reason is that the source of capital from a platform like this is cheaper, primarily because we don't have, or the platforms don't have overhead costs like branch costs, large workforce. So it's primarily moving through technology, so it brings down the operational cost to very, very low. So the benefit can be passed on to both lenders as well as the borrowers. Third thing is that there's no collateral. And the loan processing is very quick. Most of the loans the banks or the NBFCs give is, primarily asset based. If you look at the data, only 5% people in this country get penetrated with unsecured loans. Credit card penetration is just 2% to 2.5%. So the credit penetration in the country is very, very small. If you compare with the US is 65% credit penetrated. Japan is 100% credit penetrated. With India, moving towards 3 trillion economy, 5% doesn't look the number, which is the right figure. It's not that people don't get credit. Anybody who's earning, gets credit. It's just that it does not get reported in the formal system. He may be picking up from his friends, relatives, local money lender, somebody, but he gets credit. Otherwise this country cannot grow at this, pace. And unsecured loan is what is required for people to build businesses, to kind of grow to the next level and all that. So that's the reason collateral-free loans are very, very important for economy to grow, for businesses to grow, small businesses to grow. That brings to the fourth point. It's very, very important because it lends to very small micro businesses. We call it MSME, micro SMEs. This is very, very important. A lot of conversation has happened around lending to micro SMEs, but when you get down to the grassroots level of these customers, we realize that very few of them actually get credit from the banks or the NBFCs. So peer-to-peer lending companies lends itself to, because the ticket size they require is 10,000, 20,000. Banks are not very comfortable lending that amount. So it kind of reaches out to these kind of end customers, and also this helps them to grow their business. And tomorrow, this micro SME can become an SME, and that's how it helps grow economy, build more employment and all. So that's the reason it kind of ties in very beautifully with the vision of the government also, and that's the reason I think RBI also decided to kind of regulate a platform like us. What is in it for investors? So as a lender, what is it that you benefit out of it? So the first is that as a platform, we mitigate the risk not just through tech, but there are a lot of systems built within the platform which eliminates the risk. Also, there are credit experts, people who we have got from banks and NBFCs on loan. They look at the profile of the borrower who goes live on the platform. We study the borrower's profile, only then the guy goes live on the platform. So the platform's duty is to kind of ensure the risks are mitigated through technology, through systems, and through credit experts. You can expect returns as high as 18 to 20%, and that's a very exciting returns compared to the existing returns which are available in the market today, be it stock market, be it mutual fund or fixed deposits. This is a stable kind of a return which you get on a monthly basis, and that's even more exciting because the cash flow in this business is very, very high. It's a beautiful cash flow investment business. Month on month, you get the EMIs of these lenders, and that's how you're able to kind of redeploy that amount back into picking up more borrowers, so that you get a compounding effect on the amount money that you invested. As I said, it's a stable return. This is less volatility. It is not very sensitive like a Sensex. Any bad news does not cause it to kind of go down or go up or nothing of that sort, because this is the nature of the product is debt. So volatility is very, very limited. So you lend out to 100, 200 borrowers, they expect to pay every month on month. Any bad news will not affect their monthly payouts unless and until there is an issue where the guy loses his job or anything. But otherwise, the returns are very, very stable, unlike a stock market. And finally, I think for investor, it's very important, being a part of building the nation, especially when you're funding an SME. You become part of building this nation. I think that's also something that you can help somebody to kind of with credit to kind of have their own personal agendas also fulfilled. Like a father trying to marry off his marry a daughter or education of his son. So if you're being part of that, I think it's a good cause to be. Now, I'll quickly jump on to how we do this, just to make you understand what are the things that as a platform, as an organization we do to help them mitigate risk. So I've broadly classified this into 4 different segments. The first is that before the borrower goes live on the platform, after the borrower goes live on the platform, system level rules and risk mitigations, and institutional level rules, risk mitigations. So the first one is the risk mitigation before the borrower goes live on the platform. As I said earlier, there is a lot of curation which happens on the platform. The curation is done through technology, and close to 80% to 85% of the borrowers are knocked off through the technology itself. So let me give you some examples. For example, let's say a borrower registers, and if he has an income less than 20,000 rupees, he gets rejected. If the CIBIL is less than 650, he gets rejected. If the location of a particular individual is not the area in which we are able to service, he gets rejected. So technology rejects 80-85% of the borrowers, and that's what the technology does. It does curation basis CIBIL, basis the income, basis the location the borrower is coming from. So that's the first level of curation which happens. Second is that we pick up a lot of data of these customers, through which we are able to understand his ability, stability, and intention to pay. The ability and stability, is something that the banks and the NBFCs have been doing for a very, very long time. Apart from the CIBIL data, the bank statement, the eKYC that we do, we also have a lot of data coming in from mobile, and mobile gives us a lot of data in terms of what's the kind of spend that he is doing. What's the kind of is he using his money frivolously, or is he using money for good reasons? So for example, if he's ordering in every day, he may be not a good guy to kind of lend money to. Then somebody who is spending the money for utility bills, for example. Now, these are all small data points, and that decides on basis, the data that we get. The decisioning is on the risk that he runs. So the risk parameter that we have is pretty broad. So all the integrations that we have done is to pull data of the borrower in various forms. So we pull his personal data, we pull his bank statements, we pull his financial data, we pull his bureau data, we pull his, we do, mobile data. So all of this data is looked at before we decide to make the customer live. And if we see any customer which is not fulfilling the criteria that we have put out, the customer gets rejected. The mobile data also helps us pick up some references. Okay, so in the mobile data, you can get top 10 numbers that he frequently calls, and that becomes a reference point for us in case the borrower is not paying up on time. So we call on the borrower. If the borrower is trying to avoid us, we pick and call the references of all the borrowers. Now, this again is done through technology. We're able to kind of pull this data out through technology, and we kind of park this data. Once we've lent the money, if there is a repayment issue, then we reach out to this references. Then the risk, analysis happens. This is a manual check which the underwriters or the risk experts do it. They look at the data, they look at the profile, they have a conversation with the customer once before the customer is taken live on the platform. Now, why this is important is because sometimes the data that he has given may not be matching with the profile of the person. So that's the reason it becomes important for us to kind of manually check the guy, physically speak to him once over the telephone. So get a better sense. Let's say, for example, if he's taken a business loan. So 2-3 questions on the business, pretty much can, tell us exactly whether he is actually running that business and he needs a loan for that business or not. So the credit person, speaks to the borrower before the customer is taken live on the platform. Once the there is a go ahead from the credit person, there is a physical verification which is done at his residence as well as his office. Now, this is also important, and we geotag this. This data is also picked up from the mobile. If there is any discrepancy in the data which he is given us while doing the physical verification, and the data is saying something else, because when you download the app, you're spending 8 hours in the office and you're spending 8 hours at home. You can pretty much figure out where he is working and where he is sleeping. So if that data is not matching with the physical verification data, then we may drop the borrower. So that this part is also important. So we do this before the customer goes live on the platform. We also pick up security check, and we get the NACH mandate signed. This is for the collection. Security check is used for recourse in case if there is any issue with the borrower. So we pick up this before we take the customer live on the platform. Now, once the borrower is live on the platform, there are risk mitigations that we do to ensure that for the lenders, to ensure that the money that they're putting out is also mitigated well. So once the borrower goes live on the platform, we show the data very transparently to the borrowers. So he can look at the data, the financial data, the personal data, the bureau data, all the data that we have collected, except the mobile data. We don't put those transactions data. Apart from that, the raw data which is there to understand his ability and the stability to pay, we put out that data. You can also get the data of the verification report. You will also get the data on the credit assessment which the underwriter has done. So you get all this data with full transparency for you to look at before you decide to invest or part invest on that particular borrower. We have a very broad segment in terms of the borrowers. So we range from 9.99% going up to 50%, or sometimes even 60% also. Basically, what it means is that there are a bouquet of borrowers that you can pick and choose. So this again is a very beautiful way to mitigate your risk. So you can pick up, and that's how the portfolio gets built. So you can pick up borrowers at a 9.99%, who are very good customers, banks customers, the default of that particular customer segment is very negligible, is next to nothing in fact. And on the higher side, you will see defaults, but the returns are on the higher side. So you make a mix portfolio of customers and invest in small amount of money in different kinds of borrowers to make a portfolio. Once the loan is 100% funded by the borrower, there is a loan agreement which is signed. This is digitally signed. This agreement becomes important when there is a civil suit, which if you have to file against the borrower. So agreement is also an important step. So we have an agreement in place which the borrower has to sign. If the borrower is funded by 100 lenders, all 100 lenders agreement is signed by the borrower. And this also happens digitally. It's very simple and easy for the borrowers to do that. The money that the lenders transfer is parked in the escrow account, and this is the money through which you can pick up borrowers. Now this is a beautiful escrow account system which the RBI has given us. The way it works is that this is not a normal escrow account between Faircent and the bank. Here the bank is ICICI Bank. What they've done is that they have put a trusteeship on top of it. So basically what it means is that whatever that I send information to the bank will not listen to my instructions. So my instruction has to go to the trustee. Trustee instructs the bank, and only then the money moves. So your money is safe in terms of, let's say if the company shuts shop or if something happens to the organization, your money in the escrow account remains safe. It's not going anywhere because we don't have any rights to this escrow account. We cannot pull money out of this. We don't have a check, anything. We don't have rights to any of that. The only right that we have is to kind of give instruction to move the money to the borrowers, and that is what we have to give to trustee, and the trustee moves the borrowers money to the borrowers. Basis that the ICICI Bank acts. We also have insurance of the borrower. The borrower, every borrower who goes online on the platform, there is an insurance which is for the loan amount. In case if there is a death or an accident, permanent disability, the insurance kicks in, and that money is distributed amongst the lenders in the ratio in which they have funded the borrower. In the previous section, I had covered the NACH that we signed from the lenders. So all the collection happens through the NACH. So the way it works is that the borrower gets the pulled money from the lenders to his account, and from next month onwards, automatically the NACH is pulled, EMIs are pulled and brought back to this collection account and then split according to the ratios of which in which the lenders have given the money to the borrower and gets pushed back to the lender's account. So this is an automated process. This happens every month with all the borrowers. The NACH is being pulled and the money is pushed to the lenders. 100% of the borrowers all NACH enabled. Now coming to the system level rules and risk mitigations. At a system level, there are three fundamental rules, and this is the same rules the banks also apply. Rule number one is fractionalization. So what it means is that when you're lending, you can lend as small as 750 rupees to a borrower. Let's say for example, a borrower's requirement is 1,00,000 rupees. You can lend as small as 750 rupees. What it means is that with your 1,00,000 rupees, you can pick up thousands of borrowers, hundreds of borrowers. So when you're making a portfolio, this is how it has to be done. So you invest small amount in large number of borrowers. So that's what fractionalization is. Second is distribution. Rule number two. Distribution means that you don't concentrate your money in a particular city or a particular kind of borrower or a particular kind of let's say class of borrowers. For example, I just want to do women borrowers. That's a bad idea. So you need to kind of give it out to all of that. Especially some of the lenders make the mistake of doing it in a particular city. Let's say I'm from Chennai. I just want to do it in Chennai. That's a bad idea because it's subject to a lot of natural calamities. It happened actually. There was one lender who invested only in Chennai, and a couple of years back when the floods came, 2-3 businesses of his shut shop. So it's important to kind of distribute your money to different cities with different classes of borrowers and different in small amounts. So that's why distribution is important. Banks also do this. They have a lot of branches across different cities. Third rule is we have different kinds of loans. So you have business loans, salaried loans, student loans, line of credit, micro loans. So you need to kind of put your money in different kinds of loans, because all these loans have different kinds of interest. Some of them are stable, it gives you stable interest. Some of them would be slightly riskier. But as a portfolio, if you have to kind of pick and choose, you get an option to kind of have different kinds of loan products. So that makes the lenders risk even more mitigated in terms of putting it out to the borrowers. So these are three golden rules you have to follow when you're investing. What it means is basically invest small amount of money in many borrowers to decrease your risk. So the way people do it is invest small amount of money in riskier borrowers. The ticket size has to be small, and good borrowers you can increase the ticket size to maybe 2,000 rupees, 5,000 rupees. But in a high risk guy, limit yourself to 700 rupees, 1,000 rupees, and spread yourself to large number of borrowers. Because what happens is that people get greedy and they look at a good profile and they want to kind of fund large sum of money. It's advisable not to do that, because the flow of borrowers continue to happen. You have to wait for the next borrower to come to kind of put the money. Don't be in a hurry to kind of get your 10 lakh rupees exhausted, because there is a limit of 10 lakh rupees in this. Don't be in a hurry to kind of exhaust that 10 lakh rupees. Wait out, invest over a period of 2-3 months, build that portfolio. We also give a beautiful dashboard. Sorry, this is reinvest. So whatever money that comes back through EMIs from all your borrowers, this money can be reinvested, and a compounding effect can happen on your returns. If any borrower is hard pressed for time, he cannot go back and look at the profile individually, each and every data points. There is an option of auto invest as well. So you can set your parameters basis the auto invest, and your money can move basis whatever that you set as a parameter. So the parameter can be set on the risk, parameters can be set on the tenure, it can be set on the business versus salaried borrowers, and you set your parameters, and you put out the amount of money you want to put out in each risk, and the money moves accordingly. So auto invest, a lot of lenders use auto invest. Initially they come and do some little bit of cherry picking, and after that all of them go auto invest, because it's kind of a little time consuming. That's the reason they do this. So we also give you a very beautiful dashboard, and I think for Fairstend this is something which we pride upon. This dashboard gives you a lot of data. We are basically a data analytics company. It gives you a lot of data at various cuts, how each and every borrower is behaving on the platform, and compare that with your portfolio. And you can actually do course correction basis this data which you get. So you have different cuts like CIBIL cut, you have city cut, you have male, female. There are some 25-30 cuts that you have on the data, and you can pick and choose the borrower basis whatever the platform performance is. And if you see the platform is performing better, let's say in Chennai, so you can allocate money more in Chennai. If small businesses from smaller towns are performing better than small businesses in bigger towns, you can allocate money. So all that data comes to you to calibrate and course correct your investment. At an institutional level, as an organization, there are some risk mitigation that we do. One is the in case of non-payment, there is a recourse that we do. As an organization, Fairstend does this. So there is a legal notice sent after 30 days if the guy is not paying up. And we give this out to the recovery agencies to go and chase the borrower. If the money does not come in within 90 days, they're given 60 days to kind of collect the money. If the money does not come in 90 days, there is a criminal case which is filed. So we do this as a process. So anybody who's delaying, more than 90 days, a legal case gets filed, and that legal, all this gets updated in the system also. So in the system, you can see all the borrowers, a dashboard where you get to see all the distribution of all the borrowers, what's happening in terms of collection, what is it that the current status is, and if there is a legal case, if there is a notice that isn't served, is there a legal case, and if there is a legal case filed, the case number, this, that, everything is visible. Now, the lenders don't pay for this, but if in case we collect money, we take some commissions out of that, or we take 5% out of that, and that is primarily because to ensure that we are able to kind of do this expense. And the other reason we do this is, as I said earlier, the prediction for us is very, very important. If you're not able to predict it right, the lenders fall back. If I say in a 12 to 14%, there is only 1% default or a 0.5% default, and if I say that on 25 to 30%, there is a 5% default. As long as I tell you this data up front, you'll be investing in me. But if this 5% becomes 10%, there is a problem. Because for your 750 that you have put, a legal case doesn't make sense. But for us, it makes a lot of sense, primarily because there is a large amount of money that the borrower has taken, and it impacts a large number of lenders. And also, you should not get an idea, the borrower should not get an idea there's a place that you can, come free, take money and just scoot. So that's the reason we, as a process, do criminal case, so that they don't, and criminal case is pretty serious, in India, in this. Also, we report all of this to CIBIL, back to CIBIL, in case that reporting happens the first 30 days itself. If there is a delay payment, we report to CIBIL that the delay has been there. So any other company who's trying to give loan, he can, the company can easily see that there's a data point there that he has delayed on the payment. So that's what we do. So what's the kind of return that one should expect? So it depends on the risk category that you want to ride on. So at a minimum level, you can make around 13.5% to up to 13.5%. At the low risk, you can around 14.5 to 15%. At medium risk, you can around 16% you can make. High risk, you can make around 16, 17%. At a very high risk, you can make around 20, 22%. So it actually depends on how you want to build your portfolio. But as a platform, what we suggest is that you need to pick up borrowers from all risk category to get a healthy and a better return. We also have something called P2P SIP, which Faircent has introduced. So what it does is that you can invest. It's very easy to invest. In fact, you can invest, and the auto invest takes care of it. You can do monthly investment of 2,000 rupees, or you can give a standing instruction. So money moves to our escrow account. From there, it goes out to the risk category that you have already suggested. So what it does is that, so there are some benefits to it. It's easy to invest. There is a total control on the investment. There is a diversification which happens. So we diversify to a large number of borrowers there. You have the option to reinvest also in that. It's a disciplined way of investing, and there is a very low investment burden at your end. You don't have to spend a lot of time, energy, and all that. So we have this option as well for our lenders. And we have created certain products around that also for you to understand, what's the kind of returns that particular product is making. So, for example, if you're looking at aspiring women, if you're looking at enterprises, salaried, you can pick and choose these kind of products, and you can allocate money to these products. That's it. So that was from my side. I'm happy to take questions. If any.
Vinay, we have a query from one of our viewer, Manish Bhaktiani. His question is the money to be transferred before selecting a borrower for investment to the escrow account?
Yes. So if you have to participate on the platform to pick up borrowers, you have to transfer the money. So the way currently the system is, you get a credit of 2.5, 3 times of the amount that you have transferred. For example, if you have transferred 10,000 rupees, so you get 50,000 to kind of invest. But let's say if that 10,000 rupees goes out to a particular borrower, then that 50,000 rupees, the limit goes out. So limit is set basis the amount of money that you have in the escrow account. So it doesn't mean that you can only invest the amount that you have in the escrow account. You can invest more, provided you bring back more money every time you want to pick up more borrowers.
Okay, the next question is from Jairam. He wants to know, how do we know high risk borrowers? Is there a continuous rating done by Faircent?
Yes. So the categorization of the risk is very clearly mentioned on the listing. When you look at the borrower's listing, the risk is mentioned very categorically. It is color coded also, and it is written also. So if it is high risk, it is written high risk. It is low risk, it is written low risk. It's very categorically written. And also data elements also is written, basis whatever the risk parameter of the customer is. So even the CIBIL score, range is given. So you get all this data to look at, before you go ahead and invest. So all the borrowers are risk rated before it goes live on the platform.
Okay, there is another question from Bhimappa Bandikeri. His question is, you told me I can lend as less as rupees 750, but whenever I select a borrower to lend, always it will say a minimum investment of more than 2,500. So how do I invest rupees 750?
So there is a floor which we have set for this. So the way it works is that for 750, 750 is forced on all the high risk borrowers. All the low risk borrowers, we have set a different floor. Also, the ticket size also matters. For example, if someone needs 10 lakh rupees, so in that case, yeah, and if it's in the lowest risk, in that case, the floor price becomes more, maybe 5,000 rupees. But when you are in the highest risk and the amount is, let's say, small, then the floor price is 750 rupees. So there's a floor price set, because otherwise what will happen is that it will take a lot of time for the borrowers to get funded. So the idea is to ensure, basis the risk, we have ensured that the minimum ticket that you are putting out is good and fair enough for you to kind of invest in that. The other option to kind of pick and choose that is by doing auto invest. In the auto invest, you have the option to do smaller amounts, 1,000 rupees onwards, even in the low risk. But if you're cherry picking, then there is a floor price which we have set.
The next question is from S. Kumar. Since these are unsecured loan, what do you do to get the money from defaulters, at least the principal amount back?
Yeah, so as I said earlier, so we have a collection process. So the first 30 days, so the first 7 days, we send out a lot of automated emails, SMS, reminders and all for him to pay. If he doesn't pay, then a manual process kicks in. So there is a internal team who starts calling these borrowers to kind of, tell them to pay up. And if he is not paying after 30 days, the matter goes to the recovery agencies. Now the recovery agencies goes out and tries to chase the borrower. Sometimes even visits the borrower if required, and tries to kind of get the money out. In the absence of money not getting in the next 60 days, which is 30 plus 60 is equal to 90 days, we issue a criminal case. So there is a criminal case which is filed against the borrower, and there is a summon which is served. And if he is not responding to the summon also, after the second summon, the third summon, it will be a non-bailable arrest warrant which is issued against him. So these are all serious thing. Non-bailable arrest warrant is something that is very difficult for him to kind of get bail also, till the time he gets somebody to kind of pay off the money and then he gets bail. So it's a serious offense. So borrowers typically don't go to that level. Okay. What we have seen is that some of these guys delay. It's not because of the intention. It's because of maybe they have lost their job, or there's some really something bad has happened to his or his family. So he could delay the payment. He could delay the payment by 30 days, 40 days, 90 days. We have seen borrowers come back even after 6 months also. But that's not how the entire portfolio behaves. Maybe a couple of them, or a few percentage of them would kind of behave, but majority of them will pay you back. and that's how you make returns.
Okay, the next question is, I'm not very clear what he means, but still I will read it out whether you can take it. Out of 350 cities, how many cities have 80% concentration?
Maybe the top 25 cities. So we are pretty much spread out. 25, 30 cities would have, so we are pretty much spread out there. So it behaves like internet population. So the internet population is heavy on, let's say, Delhi, Bangalore, Mumbai. So you'll have larger percentage there. In smaller towns, you have lesser percentage there. Tier 3 towns, you'll have even further, lesser penetration. But it's not that the serviceability is a problem. We are able to service. Now we are going to go to even far more cities. We're not going to limit ourselves to 350. We might go to 500 cities very soon.
Okay, the next question is, can the portfolios be administered by our CA?
Yes. Yes, the answer is yes. But you have to share ideally what you should do is you should dashboard has all the data available. You can on PDF you can take a printout and give it to your CA, and including your tax this thing, what have you earned and what's for the entire year, what have you earned and what's the amount that interest component has come to you on which you have to pay tax. So that's there. You can take a printout and give it to your CA.
Okay, the next question is, how do you do physical verification in all 350 cities?
So physical verification is not done by us; it's done by a third party. So there are many companies who do it. So we have tied up with a couple of them. Ecom Express is one of them. So basically, so they are the same guys who do delivery for Amazon and for Flipkart. They have built capabilities on the lending product as well. So what they do is that they go to these customers because of the footprint that they have nationally, pick up the checks, get the NACH mandate signed, geotag the location, and digitally send us the data, scan and send us data, and thereafter courier the same. So it's not us we do; it's the third party who does it. There are large logistic companies which has been built out in the last 5-10 years, who are doing a fantastic job today for online companies like us.
Okay, Ashish Agrawal wants to know how much disbursement has been done by Faircint since inception.
So we have done till date, we have done 55 crores. But most of it has happened in the last maybe 18 months.
Okay, the next question is, how much time it takes for a lender to deploy rupees 10 lakh if he invests 750 per loan?
So anywhere between 2 to 3 months is good enough for you to invest. So the current flow of the borrowers, you can invest your 10 lakh within 2-3 months. If you're going to be very picky, then it may take even 4 or 5 months. So, but if you're not very picky, so for example, if you're going to go only, let's say I'm only going to do low risk, medium risk, then it might take a little longer. But otherwise, if you're going to build a portfolio around all the risk categories, it should not take more than 2-3 months.
Okay. The next question is, what is the loss rates across buckets?
See, loss rates are varying from different buckets. So at the lowest risk, it's there is nothing. 9.99 to 12% there is zero default. Even from 12 to 14% there is zero default, I think, or maybe 0.25% default. 14 onwards, there is 14 to 18 there is some 1.5-2% default, and it goes on like that up to 60% where there is 10 to 12% default. So that data is available on the site. So it is basically as the risk is goes up, the default also goes up, and that's what our business is. Our business is about predicting the default, and we do a lot of work and a lot of analytics around that. Why is it the borrower is defaulting? What are the reasons for him to default? Why is the borrower paying, and why is it that he's paying on time? Is he paying only us or he's paying all of them? or is he paying all of them and not paying us? So all this data is scrubbed with bureau and all of that. We get a lot of data on this, and we, accordingly change the rule engine. There are parameters in the rule engine basis that we change the rule engine and make the rule engine even more perfect as we go along.
The next question is from Kevin Samuel Vineeth. He wants to know, how do you cover 350 cities? Are borrowers in all cities physically verified?
Yes, I answered this question. Borrowers are physically verified by our logistic partner. All the 350 cities, whatever that we have cities covered, all these places are, because it's important for us to pick up those checks. So the borrower does not go live on the platform without the checks have been picked up. It does not get disbursed. So that's a very important part, because the recourse can only happen through the checks. And that's where, when we do the NACH mandate also, and the collection happens through NACH.
Okay, next question, a little strange. How many arrest warrant have you produced till date?
I think there has been 5 or 6 of them.
Okay. How much is your loan book as on date?
I mentioned that it's around 55 crores and growing.
Okay. Yes, Kumar, who asked a question earlier, is back. He wants to know, continuing my last question, if borrower gets back after, I think the borrower gets the money back after 1 to 2 months, is there extra money that I may get as an investor?
Yes. So he pays the penal interest. He pays the late fee payment. So penal interest, is given to the lender. So whatever is the amount that he has taken and not paid for that particular amount and that particular tenure, he pays the penal interest. So the penal interest definitely comes to the lender.
Anjali Bende wants to know, once the amount is deposited in the RM, a loan competent enough to monitor the portfolio?
I didn't get the question.
Once the amount is deposited in the R, is the RM alone competent enough to monitor the portfolio?
Okay, so see, I'll tell you what. So RM is basically to assist the lenders. RMs are not, they have the knowledge about how it works, but ultimately the money that is of lenders. You need to kind of figure this out yourself, how this is going to work for you. Because if you're going to blindly, follow the RM, you are basically going on his intelligence. But the important thing is that you need to understand, read about this a little bit more, and it's not very complex. It's very simple, and distribute your money to large number of borrowers. RM might say, or maybe I'm just saying, of his interest, he might say that put here, put there, and all that. So it's better to kind of auto invest in that sense, so that the money is allocated evenly and rightly to the right set of risk borrowers that you're looking at to kind of invest. RM is very, very competitive. I'm not saying RMs are not competitive. They will advise you the right things. But my suggestion is that it's always better you take the information from RM, but you use your intelligence to kind of build your portfolio.
The next question is, what is your NPA rate?
I think I answered this. It varies bucket wise. As I said, at the lowest bucket, there is nothing, and maybe in the medium risk and all, at the lowest risk, minimal risk, there is some, 1.5%, 2%. And the highest risk, there's around 12%. So it varies depending upon the, bucket. The average is around, 4.5% to 5%.
Okay, the next question is, drafting agreements acceptable online is a very specialized job. Which firm has done it for Faircent?
See, the online agreements are, normal, IOU agreements which the borrower clicks. You basically, this is it falls under IT Act. Okay, so any transaction that you're doing, and now this is backed with a lot of data. Now, this is backed with data of that particular customer who's coming in. It's backed with his IP address. It's backed with his, registration. It's backed with his documents that he has given us. It's backed with the lender moving the money to this particular borrower, or initially funding the borrower and thereafter moving the money to the borrower. So it's backed with a lot of data, this particular agreement. So the agreement is not taken, into consideration when you are going after the borrower. Agreement comes into place when if there is a civil suit. In our case, we don't do civil suits. We do criminal case, and criminal case is done on the basis of check bounce. Okay. But however, if you're interested in doing civil suit, we don't do it. We will give you all the data. You can go and do the civil suit. But civil suit doesn't make sense here, because if you have just invested 2,000 rupees on a borrower, the lawyer will take 5,000 rupees just to draft an agreement. So it doesn't make sense. So the agreement is to back your data, or make sure that the borrower who's taking the money, he's agreeing on that, and that's the reason we have to do that.
Okay, the next question is, do I need to pay a sum to get registered to FairSend? And is there a cap on the total investment done?
Yes, when you get on to the platform, to access the platform and the curated borrowers, you have to pay a fee of 1,000 rupees. It's a one-time fee that you have to pay of 1,000 rupees. And your total investment size is 10 lakh rupees. You can't invest more than 10 lakh rupees. That is mandated by RBI.
Preetham Banerjee wants to know, can I replace my regular income with returns generated from P2P lending?
Regular? I didn't get the question.
Can I replace my regular income with returns guaranteed from P2P lending? Basically,
No.
Can a person lend and expect a regular return from?
No. So we don't guarantee anything. So you can expect returns, but we are not advising you to kind of break everything what you've invested already and put in this asset class for you to get one. The limit size ticket size is only 10 lakh rupees. Okay, so it should be part of your portfolio. It can be a 5-10% or 15% of your portfolio. It cannot be generating enough. It will not be generating enough money for you. The corpus is only 10 lakh rupees.
The next question is, how do you handle TDS when lending to SME?
So it is not, the loan is not given to the organization, the loan is given to the individual. His organization is assessed, but the loan is given to the individual. So an individual to individual, the TDS does not apply.
Next question from Kevin. Can an NRI lend on your platform?
NRI can lend on the platform provided if he has an NRO account. He cannot lend from an outside account, which is operating out of India.
The next question from Sunil Varada. Should one invest all 10 lakhs at one shot, or can they invest in different milestones?
First of all, you should not be investing 10 lakhs in one shot. You have to invest small amount, as I said, small amount of a large number of borrowers. But if you want to invest only, let's say 2 lakh right now and take a break, and 2 lakhs after maybe a couple of months, you can do that.
Next question. Why will a borrower come to a P2P lender and not go to a bank?
Because banks don't lend them. So as I said, only 5% of the people in this country are credit penetrated. It's only because if you step down and just look around, go down and just ask people, the shopkeepers, the people who are walking on the road, how many of them get access to credit from the banks? But that doesn't mean those guys are not good people and they don't need credit. They need. It's just that there is no way for them to get credit through a formal setup. So if there is a mechanism by which we can enable that, there is a huge opportunity for us. So simple example is your driver, your maid, your people who, if you've been working there for the last 3-4 years, would you give him a loan? The answer is yes. So there are many people who do not get access to credit. So, for example, smaller companies of our stature, okay, we don't even fall in the list of the banks. So normally people like working in the company, if they apply for a loan, chances are that they'll not get a loan unless they have a relationship with the bank for a very long time and have kept a decent balance. Otherwise, young guys who are working in our organization, if they apply for a loan, I don't think so they'll get a loan. And some of the best minds are working here.
Okay, the next question is, can I invest 50 lakh on your platform?
You can, but you have to involve your family in that. So every PAN card has a limit of 10 lakh rupees. So if you have 5 members in the family, then you can invest 50 lakhs.
The next question is, when there are so many lenders, how will you distribute TDS to so many lenders?
TDS, there is no TDS applicable because this is a peer-to-peer format, so in which does not apply. TDS does not apply.
Okay. The next question: are borrowers insured?
Yes, they're insured for death and for disability, permanent disability.
Who are your competitors? The next question.
So I'll tell you. So it's not about competition. So it's a new virgin, marketplace. Okay. Our competition, frankly speaking, in all the peer-to-peer lending companies put together, there is huge market opportunity for all of us. So there isn't any competition right now with any of them. Our challenge, if you ask, as an organization, our challenge is about education. Okay, educating borrowers to come onto a platform like this to kind of take money, and educating lenders to come on help these kind of borrowers who can get money on the platform. So I think that's the biggest challenge that we have. If my competition is doing as much as I am doing, I'm happy, because it kind of lends to the entire education that we want to build out. So I think education is the most important piece in this. There isn't any competition that we have. We occupy, I think, more than 60-70% of the market. But I'm saying it's not going to be like this 2 years, 3 years from now. We want newer players to come in. We want larger players to come in so that this industry gets recognition. This industry gets a lot of money, and it's populated to a large number of people.
The next question is, what is the ratio of person to MSME lending on your platform? Is lending to MSME riskier than lending to a person?
So first of all, MSME and Salaried both are 50-50%. It's around maybe 45, 55. It's around the same level. But as far as the risk is concerned, it actually, you have to look at data to kind of, I cannot just give you that on the fly, but you take the entire piece together, it will work similarly, the risk parameter. But if you dissect it, you will, get this better. So people from smaller towns perform better than people from, metros. Smaller businesses, perform better than larger businesses sometimes. So there are different cuts that you have to look at, get in and look at the data. Offhand, I cannot say this. Offhand, if you look at it, it kind of works out to be the same.
Okay, that's all we have time today. Thank you so much for everybody who asked questions, and thanks a lot, Vinay, for answering the queries.
Thank you so much.
Thanks.